In this video, I'm going to go over BBBY, how we were able to spot this first run forming, how we were able to sell the top, and how potentially we can see the start of the next run forming. So to start, I'm going to go over GameStop trading from Friday on August 7th. This is the GameStop chart on the day trader tab at Nimoy. So I'm going to teach something called bullish divergence. And for those of you who are very new to Nimoy just simply reverse engineered the high frequency trading algorithms that run in our market. So for example, if we zoom in right here, you can see the 1 minute trigger cross down below the 5 minute trigger. And so what that tells us is that a sell program has just been turned on the stock. That's Nimoy's way of telling us that a sell program turned on and the stock's about to start selling. So, and in order to track the strength of the sell program, that's what the velocity is for, and vice versa for a buy program. So here's how this works. We know that the sell program is going to keep selling as long as velocity, the negative velocity, is becoming greater with each new leg down. So let's take a look right here. The 1 minute trigger crosses the 5 minute trigger and price is 26.33 and the 1 minute velocity is negative 1.6. When price sells down and makes this new low at 26.03, 1 minute velocity also makes a new low at negative 0.03. And so you can see, if I remove everything else, that as price is selling down, velocity is also coming down. And when price makes this new low, velocity is still selling down. And so that tells us that this sell program that's running is still fully in control. So you can see price makes one new low here and then a second new low here. And with each new low, velocity is getting stronger to the downside. Bring back the 1 and the 5 minute triggers. And now you can see something interesting over here. When price makes this new low, all right, the 1 minute velocity does not make a new low. So right here is when the sell program starts losing steam. And the rule of Nimoy is once you have 3 divergences on any time frame, whether this is the 1 minute velocity or whether it's the 5 minute velocity or whether it's the hourly velocity, it's all the same rules. Once you have 3 divergences, that tells you that the bottom is in for this leg. So price makes a low right here at about 25.48, and the 1 minute velocity is negative 0.043. When price makes this new low, that's your first divergence, because price makes a low of 25.10, and the 1 minute velocity is negative 0.28. This low is your second divergence. Price goes to 24.94, and the 1 minute velocity is still not as great as it was here. And on this low at 24.48, this is your third divergence. So again, I'll just remove the triggers to make this clear. Over here, price is selling and the sell program is in control because the velocity is becoming greater to the downside with each new low. But this low, and this low are all bullish divergences. And 3 bullish divergences mark a bottom. And you can see price starting to rise out of the hole here. And towards the end of the day, we actually have the 1 minute trigger cross above the 5 minute trigger, which tells us that now a buy program is starting. And you can see the reaction that price makes to the upside. And you can see the velocity to the upside is with each new high, all right, so 25.08, velocity is 0.008. Then we make a new high, 25.11, velocity is 0.009. We make a new high, 25.20, velocity is 0.013. So with each new high, you can see the 1 minute velocity making a new high. That tells us the buying is strong, right? And if the trading would have continued, we would have expected price to at least attack the hourly trigger at 25.78. So how does this pertain to BBBY? If we take the BBBY chart, now that you know what divergence is, we can do the same thing on the daily time frame. So let's take a look at this entire leg down. I'll zoom it in to make it easier to see. If I bring on the daily velocity to the chart, you can see that, well, we had the daily trigger, we had the hourly trigger cross under the daily trigger, which brings on a macro sell program. So the 1 minute trigger crosses below the 5 on the GME chart that I just showed you. This is a micro sell program. This is just on a much lower time frame. Once you have the 1 minute trigger cross down, that tells us that the selling's about to start. On the macro time frame for BBBY, once you have the hourly trigger cross below the daily trigger, that tells you that on a macro time frame the selling's going to start. So price makes a low here at 14 bucks and the daily velocity is negative 0.2. When price makes a new low at 13 bucks, the daily velocity is increasing to the downside, negative 0.33. And then when price makes this new low, the negative daily velocity is still increasing to the downside, negative 4.6. All right? But watch what happens on this new low, on this new low, and on this new low. With each new low, if I remove the triggers so you can see it pretty clearly, the velocity is diverging. So over here, because velocity doesn't make a new low with price, that tells you that when you have 3 of these, that's going to bring in a bottom. And so here's your first divergence, here's your second divergence, and here's your third divergence. And you can see after the third divergence, price marks a bottom. And then we get an hourly trigger, daily trigger cross to the upside. That happened right here. So this whole leg down, when the hourly trigger is below the daily trigger, that's a sell program. The divergence tells you when the sell program is running out of steam, and the bullish trigger cross tells you that buy programs are now entering the market. And on this day, August 3rd, when we got the bullish cross, we were able to go long with confidence at about 560, or we actually went long on the break above the daily trigger with a stop loss right below the daily trigger. So we were able to go long at 550 with a stop loss at about 560 for the entire move, for the entire month of August. So on August 3rd, we got the trigger cross, and let's zoom in over here. Price ran in about 2 weeks from $5 to $30. Now, if we were just going off the macro chart, we would have been out on this break below the hourly trigger at $20, which is still a really great trade. But because we have access to the day trader chart, we're able to spot divergences, bearish divergences, so the opposite of what I just showed on the day trader chart, and we're able to get out at these highs. In fact, another thing that I won't get into right now, we also had negative monthly velocity and price broke above the monthly trigger. And so that we knew, Nimoy told us that for the month of August, price will not remain above 1678. So when you have negative monthly velocity and price breaks through the monthly trigger, it's not saying that price can't break above, but it is saying that price will be pulled down below 1678 for the entire month of August. And so this wasn't really a runaway setup in the eyes of a Nimoy. Now that you understand that part, let's look at the daily velocity and bring back the daily trigger and the hourly trigger and try to see what's happening right now. So if we zoom in over here, you can see that here's where the sell program turned on. So the hourly trigger crossed below the daily trigger, and you could recognize the sell program. It's just grueling selling, all right? And Nimoy is protecting you from taking calls here and just getting burned, unless you're taking really quick scalps. But price is below the hourly trigger for most of this entire time, so there hasn't really been any great opportunities for scalps. Maybe over here, could have got a quick one, over here, and over here, but nothing really great. But if we look at the daily velocity, you'll notice something very similar to what we just talked about. So price marks a low right here at about $7, and the daily velocity is negative 2.3. Now, when price makes a new low over here at $6, 588, this is your first daily divergence because the daily velocity is negative 1.3. So I'll remove the daily trigger so you can see this really clearly. Here's your most extreme print to the downside, and then price is making one long move down, marks a low right here. That's your first divergence. And over here, BBBY is making its second divergence. And so if BBBY makes one more low and the daily velocity does not exceed this print right here, that would mark a turning point for BBBY, and we would wait for the hourly trigger to cross back above the daily trigger to confirm the start of the next leg up.